Good morning, everyone. It's nearly 20 to 10 here, UK time on the 19th of March, Thursday the 19th of March. Well, VectorVest USA says it all. 86% of all of the shares in the US market declined yesterday, and less than 10% advanced, and many of those advances, in fact, were exchange-traded funds. Inverse exchange traded funds. The buy sell ratio on its knees at 0.02, and the advice on VectorVest tells you clearly what to do. VectorVest doesn't advocate buying stocks at this time. In terms of trends, the primary wave, or the short-term trend of the US market, is down. The underlying trend is down, and that underlying trend has been confirmed down by price action. So all of the metrics on VectorVest are in fact down. You can see this little red light here, which is not good, and in the red light there's a black star, and that black star tells us visually that the price of the VectorVest composite is down and the momentum is gaining to the downside. So a very weak situation indeed. I'll show you the VectorVest composite, which is this chart. And that's the VectorVest composite of the USA, and down below we have our proprietary market timing indicator and our proprietary buy-sell ratio, the number of shares on a buy divided by the number of shares on a sell. I think that leading the charge at the top is what Dr. Lido calls the canary, which is the buy-sell ratio. And as you can see, as the price was making that run up into February, price of the composite rose, but the buy-sell ratio couldn't come to the party at all, and in this little bit of a false move up here, the buy-sell ratio couldn't get its head above water at all. So that divergence alerting us that something was up. In fact, I tweeted something is up for those who follow me. Market has fallen very hard indeed. We've got a massive mega oversold situation on the MTI and on the buy-sell ratio. Nevertheless, it's still far too early to do anything. And if we go back to the front page, I would like the minimum qualification for getting on board for the most aggressive traders would be that we see some green light in this price column and the primary wave turns to up. That's the minimum qualification for the bravest traders out there. And on the day that that occurs, folks, I would like to see the advances at least twice that of the declines. Okay, so there's a little bit of breadth coming in as well. More conservative traders could easily wait for the underlying trend to turn up, and those following our worry-free methodology would certainly wait for the call to change to a confirmed up. But let's just look now at the S&P. This is the S&P cash. And I think it was probably naive for us to think that this could in fact find a bottom without taking out this December 2018 low. That's what happened yesterday, and the market found some support at that level. Is this level likely to hold? Well, I really don't know. The news on Bloomberg could not be worse. Their leading article is that youngsters are now falling to this darn virus. So the news just couldn't be bleaker. Maybe that's a positive signal. Could this go any lower? By all means, folks. And if this level goes today, then the next level will be this confluence of the 2015 high and the 78% retracement of this run up since 2016. So, and that would be down at a, where is that? That is at a level of 2144 on the S&P. Now, I looked at the S&P futures a second ago, and this level was still holding, but my word, it won't take much for this to get down to that old top. So sooner or later this market will bounce, folks, from a mega, and bear market rallies are incredibly strong affairs. And however, any push up the page, in my humble opinion, should be looked upon as a bear market rally until it proves itself otherwise. So until this actually gets up here and breaks above a 78% retracement of this range, the wrong way around, David. If I put up the fib like so, until it in fact breaks above a 78% retracement of the fall, then I shall be treating this as a bear market rally. I think you should do as well. We can always change our minds if the central bankers in fact manage to push this up. I don't think they'll be able to do much unless the news flow out of the virus in fact gets much better. As I said, couldn't be much worse this morning. So maybe the low is in, but I think there's a high probability that we can get back to that old high. Let's see what happens over the next couple of days. We don't have to guess. The front page of VectorVest will tell us exactly what to do. Now, if we do get a bottom, which will come, where should we be looking? Well, first of all, when some form of normality returns, and it will be, to quote the PIMCO guys, a new normal. But I firmly believe that anyone with a strong balance sheet will do really well. So we don't have to look that much further to find those shares with the strongest balance sheet. And to do that, it's actually quite simple. We just go to viewers, and we in fact go to the stock viewer, and if we resort by relative safety, we'll find shares with outstandingly strong balance sheets in one click. I've done one better, folks. Our data provider is a company called FactSet, and I spoke to FactSet, and I asked FactSet which companies have got most money in the bank, and they come up with some fairly predictable answers of companies that you know reasonably well. I've called these cash-laden giants, and there's my watch list. I think you know them all. Microsoft has got 134 billion in the bank. Google's got 100 billion, Apple's got 100 billion, Facebook's got a miserable paltry 56, Amazon 46, and Berkshire Hathaway about $70 billion sitting in the bank. So they're, in my humble opinion, these companies will do exceptionally well. Now, I think that these companies will be able to acquire companies with very little cash in the bank quite cheaply. For example, Avis Car Hire has got 2 weeks of cash reserves left. Now, how many people are going to be hiring cars in this environment? I don't know. I have no idea. But I would suggest that much less than this time last year. So they're going to be in trouble. Those executives that spent a great deal of money buying back shares will be having very poor dreams at the moment. So I want to look at these now. I've loaded them a second ago. There's Facebook, folks. And Facebook, well, as you know, Dr. DeLeo was the fundamental analyst. I'm the technical analyst. And Facebook coming back to a nice level of support here. And I think that in any relief rally, whether it's a continuation of the bull market or whether it's in fact a relief rally in a bear market, I think that if we do find a bottom here and the general market starts to move up, Facebook can quite easily get from 146 to $200 in any move, and that could make our year. So that's something for you to consider. As you know, I love my Fibonacci work, so from here up to that top, and then you can see my famous 78% retracement coming in around about the same level. The price tends to overshoot in these very rapid markets. It could take a day or two yet for this to turn. As you can see, the sell-off very strong indeed. If I put on the old stochastic's getting down into the buy area. Maybe it needs to turn, and that might take a day or two yet. Okay, maybe even a week or two yet. So that looking quite good. So that's something for you to look at. Google, Alphabet. These guys give it 100 billion, and they're sniffing around biotech companies at the moment, and they have a strategic mission to grow in that area. I think they'll be able to pick up those companies fairly cheaply. And as you can see, a strong support line in place, and if we go from that low, somewhere about here, to that high, we can see that 78% retracement comes in at exactly the same level. That's an incredibly good confluence. Just remember, although this looks like a doji, this has been done on Thursday morning, so there's 2 full days of trading to go here yet. So, but certainly, if we were to get print a green light, and we saw the number of advances being significantly higher than the number of declines, then I think the bravest traders can start to look at that. More conservative traders would want to wait for more confirmation from the market itself. In any relief rally, that can move certainly up towards those new highs again. This is Visa, and Visa, I think a fairly easy to spot trend line. As you can see, there's an old top here as well, which is always good. Support becoming resistance there. And if I put on my fib to here, we can see that we got an exact 78% retracement. So those of you that follow my work at our VectorVest weekly webcast will be yawning, because I do this for them every Monday afternoon to spot high probability support and resistance, where we can actually get in with very little risk with a huge upside. Now, I'm not saying there's huge upside here, but I'm saying in any relief rally, if the general market starts to move up, I assure you that the fear will turn into greed in about 30 minutes, folks, and you'll see this darn thing shooting up, even in a relief rally, up towards the 190 level. That could make our year. Visa, plenty of loot on call. Let's have a look at Microsoft. $134 billion in the bank. As you can see, it's pulled back much less than many other companies. There is a trend line here. We haven't come anywhere near the 78% retracement, and it stopped around that last old high, which held Microsoft, as you can see, for a couple of months in there. Again, looks like a doji, but remember there's 2 days more trading to go there. I think this share will do particularly well because they can in fact go on an acquisition hunt, and I think over the next 6 months be able to acquire companies for virtually nothing. Okay. The company in question will have 2 choices. One, take the money, whatever it is, or go broke. Apple, 100 billion. And as you can see, pulling back towards that last old top, and I would expect, if the market does turn, that we'll actually see some form of support coming in here. Far too early to do anything yet, folks. Far too early. So somewhere around the 230 to 235 level, I would expect some support to come in there. And Amazon pulled back less than any other company. A very strong trend line in place. It was actually up a tad yesterday, I think. So we got the strong trend line in place, and that low is in fact a 62% retracement of the last range. So Amazon, I think, worthy of your attention in any relief rally. And Berkshire Hathaway, of course. And Berkshire Hathaway, we've got to go back for a while to actually see the trend that's in place here. And if a low were to come in somewhere around this level, that low would be much higher than the previous significant top. I think that we can this is a quite easily see that we've got a trend line in place here. In these chaotic markets, folks, they can go through the trend line, and the support would still be judged to be holding. If we put on our fib from that low to that high, we can see, if I get this right now, we can see that that's pretty much 62% of that. So we've got this confluence again. We could easily come back to that in a panic move to that old top, but I'm hoping that if these levels can hold, that somewhere around here over the next 10 days, 2 weeks, that there's going to be quite a unique buying opportunity in these particular shares. So folks, don't get despondent. We have a once in a certainly decade opportunity to buy into shares with outstanding balance sheets, at a very, very cheap price. I've suggested half a dozen stocks here, but if you want to actually go to VectorVest, resort by RS, and that will bring those shares with outstanding balance sheets to the top of the pile. Shares with a proven track record of performance. I think that those shares will do exceptionally well once this new normal is established, and that may take 6 weeks or 2 months. Those shares will be able to acquire companies for virtually nothing, companies that are going to struggle to get through 2 to 3 months of virtually no sales. I hope you find this helps. Thank you very much.